Thank you for tuning into AWANI. Right now, we want to explore on the evolving Malaysia's landscape of construction in Malaysia that's right now very dynamic, where construction growth among private sector investors in Malaysia is gaining momentum, largely driven by the surging demand for data centers. And this trend reflects a broader shift in infrastructure priorities as digital transformation accelerates across industries. And according to Turner and Townsend's Global Construction Market Intelligence GCMI 2025 report, construction costs in Kuala Lumpur remain relatively low compared to regional peers. And however, the recent expansion of the sales and service tax SST to 6% for all construction work services, particularly for infrastructure, commercial and industrial projects exceeding 1.5 million ringgit annually adds a new layer of complexity to cost management. So this policy shift raises concerns about potential cash flow constraints, and this disrupts contract as well. And when it comes to project delays, it involves that as well, which could ultimately slow down the market momentum. So to unpack these challenges and also explore the road ahead, I'm joined by Leow, the Country Director of Turner and Townsend Malaysia. Good morning, Leow.
Good morning. Thanks for having me.
Thank you for joining me in the studio this morning. Perhaps we could start before we expand further on this issue. How do you foresee the expanded SST is actually influencing both the broader Malaysian real estate and also the construction market in Malaysia? And what are the immediate and also long-term impacts when it comes to cost shifts for both developers, contractors, and also buyers?
Yes, right. So it is clear that the expanded SST is adding a new layer of cost and also the complexity to both the construction and the real estate markets. Immediately, it increases the cost of development, especially for industrial, commercial, and also the mixed-use developments. While the residential projects are exempted, but however, this tax is still applied to residential building within the mixed-use development. So for immediate impact, we are seeing a cost pass-through effect where the contractors now are reflecting their pricing to include the 6% SST. And naturally, we are expecting the developers to pass on the cost to the buyers. As a result, the price could be higher, and this is directly impacting the affordability. We're also seeing a cash flow pressures on developers. The higher upfront payment is actually putting more pressures on the project financial. And on top of these, there are a wave of contract renegotiations. For ongoing projects, many of them require variation to the original contract sum, especially if the original agreement is without a clear clauses that define how the change in SST is being treated. So this adds to the complexity and potentially delay the project timeline. So in the long run, we expect to see a reduced margin, especially in price-sensitive markets or segments, where both the developers and the contractors may have to absorb part of the cost to stay competitive. Otherwise, not alternatively, otherwise, this could lead to a shift in the buyer behavior, as the higher cost could defer or even deter the purchases. Also, we anticipate a change in behavior in how the contractor is approaching the tendering. Many of them are likely to price in more conservatively or adding a contingency sum to cater the uncertainties related to SST. And in terms of planning, we may see developers becoming more selective in terms of the land banking and also the product strategy. In particular, mixed-use development might be phased or even designed differently to mitigate the tax impact. So overall, the expanded SST is now reshaping how the project is being priced, how the project is being financed, and also how the projects are delivered across the industry.
All right, so the price hikes after the SST expansion to 6% is very worrying, not to just us consumers or buyers, but it's to developers and contractors as well. So for ongoing construction projects, how are developers and also contractors actually adjust their financial planning and also procurement strategies to account for the expanded SST?
Yes, indeed, ongoing projects are in a very challenging situation now. Most of the projects, if not all, were planned and budgeted before the SST expansion. And this additional cost has actually forced the project team to rethink their whole strategy. Now we are seeing developers and contractors reassessing the procurement model. In many cases, they're splitting the work packages in a more strategic way to maximize the B2B exemptions. And this helps to avoid double taxations and contain the rising costs.
Okay.
At the same time, they're revising the financial model of financial planning to incorporate the additional costs for SST, because this is no longer something that can be treated as an incidental cost, but it has to be built into the core financial model of the project. And also, there is a much stronger focus or emphasis on value engineering. So the teams now are going back to the drawing board, trying to optimize the design and specifications. This often involves designs, simplifications, substitutions, and even rethink the whole construction method. And finally, we are also seeing a growing reliance on the quantity surveyors and also the commercial advisors. Their role are becoming even more critical now to help the team to understand what is the tax implication and work with the team to find ways to mitigate the financial impact.
So indeed, a holistic approach needs to be done as well to actually mitigate all these challenges, and also when it comes to the financial planning as a whole. But one of these strategies to actually mitigate the cascading tax effects is businesses now explore B2B exemptions. This is to actually provide construction work to actually, to mitigate these challenges. So what challenges do you foresee in implementing this, managing these exemptions across multiple tiers of subcontractors as a whole?
Yes, well, and there's no doubt that the B2B exemption is a very good mechanism. It is designed to avoid double taxations, but however, to put this in practice is actually quite tricky, especially for construction sector, where we often have a long and complex chain of subcontracting. One of the biggest hurdles is actually to maintaining a consistent and clear documentations. For larger projects, there are multiple layers of subcontracting. So to maintain a clear documentation trail is challenging. Everyone needs to be aligned, which is quite difficult. Another issue is the awareness and inconsistent understandings. Smaller subcontractors in particular, they might not be familiar with how the B2B exemption works, for example, or they might be slow to comply with the documentation required. And this could lead to a gap in the compliance, and which is leading to another concern, the audit risk. Without a clear documentation trail, businesses could face issues during the tax audits, which is leading to a penalty. Right? And above all this, here comes the administrative burden. Managing all these documentations and verification process takes a lot of time and effort. So basically, it could delay the whole procurement and adding more pressures to the already tight timeline. So in short, B2B exemption helps, but it requires a strong coordination, it requires clear communication, and it definitely requires a strong documentation practice to make it work smoothly.
But given this new tax landscape complexities, what are the actually practical strategies can contractors and also developers employ to effectively navigate this new expanded SST for both ongoing and also the future projects?
Yeah, that's a really important question. So we are definitely in a very complex environment now, but there are a few practical steps that could help, in my opinion. First, by setting up an SST task force or internal tax team, or engaging an external engaging an external tax advisor, especially for larger projects. Either way, having a dedicated support for the tax matters can actually help the team to make sure that the tax planning is integrated from day one, but not an afterthought. Also, having this dedicated support or tax team actually helps to monitor the tax compliance. It helps to coordinate the SST documentation, and it also helps to stay ahead of any changes. Second, to incorporate a clear clauses about the SST as to how the tax is treated, who is responsible, and also how the indemnity are handled. This avoids confusion and disputes later on. Also, the communication and training are key. The project team, especially the procurement team and the finance team, need to be upskilled. They need to understand how the SST works. The subcontractor need to understand how the B2B exemption works. So everyone in the supply chain needs to be aligned. And last but not the least, tax planning. Contractors and developers, they can look into their supply chain more strategically, sourcing from the SST exempted suppliers, or restructure the procurement model to legally minimize the tax exposure. So overall, it's all about being proactive. That means upfront planning, tightening up the processes, improve communication, and equally important, make sure that the right expertise is in place.
But are there any further support or perhaps clarification that would be beneficial for the industry to ensure a smooth transition towards this expanded SST when it comes to the implementation?
Yes, I mean, certainly there are a few steps that I think will be helpful for the industry to navigate this more smoothly. First, we need a clear and timely guidance. At this point of time, at this moment, there's still a lot of uncertainties and misunderstanding about the SST, such as how the SST apply. I've seen some visuals explaining how the SST applies for contract signed before the expansion, also how the SST applies to works before and after the SST expansion, which is very helpful. We need more of these. Second, having a dedicated helpline or online support tools for the construction sector would be a big help. A lot of businesses, especially the small ones, are still trying to figure out how it works and how to comply. So by having a central place that can offer quick answers would be a big help. Third, it would be great if the government can continue to review the grace period and to make adjustment accordingly, especially for larger and long-running projects that is started before the SST expansion. This will allow the companies to adapt to the changes without being penalized.
So that's on the perspective of developers and also contractors, all the businesses. But now let's look at the consumer or the buyer's perspective. You know, buyer preferences for housing investment has now shifted with more priority given to convenience, accessibility, safety and also affordability. So how should the Malaysian construction industry adapt to attract and also capitalize on these investments?
Let's zoom out a bit to look at the broader industries. We definitely see a shift in where the investments is going. So in Malaysia, there is a growing interest in data centers, advanced manufacturing, and also the logistic infrastructure. And these sectors are very much different from the traditional real estate. They demand speed, they demand scalability, and they also demand strong digital integration. Another big shift is the rising focus in ESG performance. Global investors in particular are putting a lot more emphasis on sustainability, carbon footprint, and also the long-term environmental impact. So it's no longer just about the cost and time, it is about how responsibly the project is being delivered.
Sustainability, yeah.
Yep. And again, for Malaysia to stay competitive, in my opinion, we need to expand the green incentive. We need to fast-track the approval for strategic sector. And we also need to promote public-private partnerships, especially for ESG-linked development. And for those developers and contractors who can better align themselves with these priorities, especially through the sustainability and the digital innovation, are much better position themselves to secure both the foreign and domestic capital.
But this expanded SSC is only one of the many challenges that's going on. Right now, we have tariff deals and also we have trade wars. But despite all that, the Bursa Malaysia Construction Cost Index shows a cautiously optimistic sentiment. So what factors that contribute to this resilience, and what is your overall outlook for the construction industry in the coming years?
Yes, I mean, despite all these pressures, there are several key factors or contributions keeping the industry optimistic but cautiously. We are seeing a strong pipelines for the public projects. The major infrastructure work like the MRT3 and the Penang LRT has actually helped to sustain the order book and maintain the activity level. At the same time, the private investment is growing. We are seeing more development in data centers. We continue to see investments in manufacturing plant and also the logistic hub. all these projects are long-term and they bring confidence to the markets. Also, the labor market is actually recovering. The improved inflow of the labor, the foreign workers, has actually helped to stabilize the labor pool. And this is in turn reducing the cost volatility, which has been a major challenge in the past few years. Now, looking ahead in a short term, we expect the cost pressure to continue, especially with the expanded SST. But with the right strategy in place, it is manageable, in my opinion. In the midterm, the outlook remains resilient, particularly for infrastructure, industrial, and institutional works. Having said that, we are keeping a close eye on the material prices, the labor policies, and also the trend of the global interest, as all these costs and all these factors is actually affecting or influencing the cost, which is we need to keep a close eye on it.
Perhaps if I may add one more question, do you have anything to say or perhaps any advice to buyers out there that they have quite high interest to buy houses perhaps, or any assets? So what can you say to them?
Yeah, probably I'm not the expert here, but normally as a buyer myself, basically before I make any purchases, normally I will just not looking at the price alone, and also depending on, as a buyer, are you speculators? Are you buying this for investment or buying this for homes, for own stay? But price is not the only parameters, right? As a buyer myself, I look at the price, I will look at the several factors like the location, accessibility. So that's who I am.
Thank you so much. That was the Country Director of Turner & Townsend Malaysia. That was Leow, and thank you so much for coming all the way to our studio this morning. And you can find the whole discussion on all of our social media platforms, and that includes astroawani.com. Thanks for watching.